Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. I think, like me, all of you want to know what's up with the rupee. Yesterday, rupee hit a fresh all-time low and traded as low as 83.67. Asian pairs have remained weaker, led by the Chinese yuan, and a broad dollar strength is being experienced. Good morning, Jackie. Your thoughts on recent move in the rupee, and what do you think would be the next course of moves?
Yeah, good morning, Swaraj. Yes, rupee has made a significant intraday move yesterday. 20 paisa loss against the dollar from 83.4 to 83.65. And this, in fact, has been triggered as nationalized banks were seen buying at 83.35 when it hit on the back of flows, but they were seen absorbing all those flows and push it higher. Then the large investment flows and importer buying took over, and not much support for their outflows was seen from the PSU banks until it hit a level of 62, and so that's the factor behind the move. And of course, the global factors were not also supportive of the rupee. Chinese yuan again weakened beyond 7.28 on the offshore market, and the onshore yuan traded near the ceiling of 7.26. Asian currency pack was generally weak, and even the dollar index was somewhat on the stronger side, with the yen moving closer to 159, of course. And yes, all this does not really reflect the positive sentiment, which is still ruling the risk asset. The Dow Jones closed higher. Indian markets also made new high on the main indices, and not that we had any major outflow from the stock market. It was more of a FDI flows that were outgoing, and that was the reason. Now, what's ahead, as you asked me? See, daily close above new all-time high is definitely a bullish sign, but we still need to see weekly close and a monthly close. That's what the most medium-term technical followers will be looking at, and we'll see how we close. And also, importantly, how the central bank approaches this situation of fresh weakness emerging in the rupee. In all likelihood, even more weakness in the rupee following the global cues will only be on a gradual basis, because the speculative element is absent in market, and the moves will be determined by actual flows. Going into the global market, we had policy decisions from major central banks. Indonesia kept rate unchanged, looking at the weakness persisting in the rupiah. Then Swiss National Bank cut their rate for the second successive time. One of the two factors were in their mind. One is the inflation, which was lower than their target, and then also the phenomenal strength of the franc, which they want to arrest. There is likelihood of another cut by them in September. Then Bank of England, as expected, left the rate unchanged, but their statement was kind of dovish. So there is no possibility that they cut rate in August meeting also. That said, it did not have much of an impact on the currency markets, because they were mostly ruled by the flows. And we did, of course, see more dollar strength as yields recovered yesterday. Euro coming back closer to 1.07. But the bigger moves happened in the metals, where gold and silver made a significant move towards their resistance, particularly gold towards 2365, where it has capped for quite some time. So it will be interesting to see whether it breaks this level, but that requires a renewed buying from central banks, who I think will be looking at lower levels to buy, and they may not be chasing the prices. So gold may still limit its gains for the current level. And on the broader dollar side, yen is at a very crucial level. We are close to another 34-year low for the yen against the dollar. That was 160, which was seen in April, and then we did see the Bank of Japan coming and intervening. This time, the market seems to be taking on the central bank, whether they will intervene massively or whether they will make a policy move before their regular meeting due. This is something that will be watched closely by the market, because if yen does break 160 and sustains it, then that will be paving way for more dollar strength. So a lot of things happening on the currency side. Yes, not but the least. US Treasury has published its semi-annual report on the currency markets. They have mentioned that China has used yuan fixed rate for the past year to prevent weakening of the yuan without official explanation. And they've also included Japan in their watch list for monitoring. However, Japan has disregarded this, and it's very likely that if there is a disorderly move in the yen, they will come and intervene to rein in the dollar. That's a very interesting phase for the currencies, and a lot of events ahead as we get into next week of US data on PCE inflation and the GDP number, and of course the European elections. Thank you.
Thank you, JK. And it was definitely an action-packed day for the currency markets, especially the Asian pack, with the rupee moving 20 paisa against the dollar, and outflows also did not see much of support from NATs, and only a support was seen at around 83.62. Asian currency pack is generally weaker. Japanese yen is close to its crucial level and at its previous intervention levels, but a break of 160 for the dollar JPY may trigger some more dollar strength. When it comes to events, S&P cut its rates for the second consecutive meeting because of strength in franc and the low inflation. Bank of England, they kept their rates unchanged, but the statement was dovish, and there is a possible rate cut in the next meeting. There was a lot of moves in metals, gold and silver moving up to the upper end of their range. That's it from us today. Have a very good weekend. Tune in on Monday for the latest in the financial markets. Thanks for listening.